Welcome to this video. In this video, I'm going to be making a stock analysis of Ferrari. So if you like this video, please don't forget to leave a like and subscribe. And of course, remember, this isn't financial advice. This is pure entertainment and educational purposes. As you can see, currently we're looking at the graph where each candle is a 1 hour time spectrum, which means we can see all the way back to the mid of 2024. As you can see, in that time period, we've had quite a volatile stock. As you can see, we had quite high peaks here, almost up in 500, but then we had the Liberation Day and shit really hit the fan and it tanked quite a lot because, of course, Ferrari will also be hit by the 25% tariff and they are not spared from it yet. So that is something that could hit them. Of course, it has not been put in place yet, but that is something we need to worry about. And then you saw this also the other day. As you can see, it fell quite hard on the earnings, as you can see here, because the revenue were lower than expected. Now, I'd say even though that happened, I still like the stock quite a lot. And that's because they're releasing this car, which is called the Parasang. And the reason I think that matters quite a lot is because a company like Porsche made a ton more money when they released their SUV. Just take a look at this graph right here. As you can see down here, this is from 1998, and as you can see on the colors down here, these two are the ones we want to care about, the Cayenne and the Macan. These are the two SUVs models. As you can see, we have the 911 and the Boxster Cayman. As you can see, those down here. But then we see the Cayenne being released, and just look at how much more many cars Porsche sells. And when the Macan is released, as you can see, still incredible amounts. And you can also see them just up here in the global sales, how many more cars they're actually selling, which are the Cayenne in this one here right here. That's not the one that's Cayman, this one right here. Just look at how many more cars are in here. And then when we get down here to the Caymans as well, no Macan, which is absolutely crazy. So I think that is also going to happen to Ferrari. That is at least my thesis personally. Now that's the reason why I like Ferrari quite a lot at the moment. Now if you take it a bigger time frame for this stock, as you can see, it has been performing quite nicely ever since 2022. As you can see, it has been quite a nice ride upwards. Of course, we do see some blips like this one right here, we fall quite hard, but then we rise again quite sharply. So overall, quite a nice stock. Now I do like it quite a lot, also just because the brand recognition in Ferrari is absolutely insane, which I like quite a lot. Now, as you can see currently, in the stock we're laying at is at the previous support level, which was formed back in 2024 early days. As you can see, that is where we're still trading. If we fall below this, which I don't think we will do right away, the next proper support level is down here or up here, which means we're going to probably either see it about here, but this is quite a weak one, and then a better support level is right down here. So if we fall much further, chance is going to be down here at the top of 200 and low 300s, which is the next proper support level we have for this stock. If it falls all the way down that's going to be quite poor, but then again, we don't know. As you can see, of course, Ferrari is a quite decent sized company, and the beta in this company is quite low for a car manufacturer that makes luxury cars. Now, the beta of 1.04 means it's about as volatile as the average index it lies in. Now, the RSI for the stock is currently quite poor. As you can see, we are down here in the lower RSI. Of course, if you don't know what the RSI means, that is the relative strength index. So if something is between 50 and 30, it is in the lower channel, meaning the stock is trading downwards. If it's between 50 and 70, it's in the upper channel, meaning the stock is trading upwards. And if it's above 70 up here, it's in the overbought, meaning it rises rapidly, and when it's down here, it is oversold, meaning it falls rapidly. So when it's down here and up here, it is quite volatile. And as you can see, we've just been down here, but then it rose again a bit. Now, if we roll here to the earnings, as you can see, they surprised on earnings, which is still actually quite surprising, but of course, we love to see that. Then dividends, they pay out some dividends, but it's really not that impressive. Overall, here in the income statements, as you can see, this is quite nice. We love to see that increasing more and more and more, and they have great margins for a car manufacturer. Now, as you can see, the revenue that they generate are car and spare parts is by far the largest part. And then sponsorship, commercial, and brand. This is the Formula One sponsorships and Le Mans, and also their clothing brand and stuff like that. And then we have others down here, which is like partnership with B&O for speakers and stuff like that. And we have engines down here, which is for other car racers manufacturers, but they don't really do that anymore. Now, as you can see, we are basically everywhere, but we are quite big in China, Hong Kong, Taiwan, and the United States. So the problem is, if we get these huge tolls or tariffs into the United States, chances are we're going to see that slow down quite a bit, which of course we don't want to see, as it is one of the largest markets for Ferraris in the world. Now, the overview here, as you can see, they have quite little amount of debt compared to the enterprise value, which is of course lovely to see. They have quite decent cash and equivalents, which of course is nice to see. Now, the PE ratio of this is a bit high, as you can see here, by 42.9, but overall it is Ferrari, so it makes quite a lot of sense, at least in my opinion, and especially now that they're coming out with this SUV. Now, we're going here to the seasonals. As you can see, ever since 2016, it has been quite a decent stock to own. Double-digit gains basically every year. Of course, you have some poor years, like this year we're down by a bit after Liberation Day, and after other, as you can see right here, in 2022, also down by 12%. But overall, it's a quite decent stock to have. Our technical for the stock for the day is sell, which of course it says itself, and for the month it is a neutral. I'm actually surprised it isn't sell given the fact that we have dropped so much, but I just think that is because we are laying on some previous support levels. That is, it is a neutral at the moment. Now the analyst reading on this are quite decent. We have 10 strong buy, 4 buy, 7 hold, and 2 sell, and 1 strong sell. But overall, the average price is a bit high up, it would seem right now, especially given after this huge drop off, which means the average before the drop off was like plus 1%, now it's up by 17%. I do think it's going to end the year in about the 410s, 420s. That is at least the personal. Because unless we get this tariff sorted out, I don't think it's going to be that a popular stock until that is normal again. Now the annual EPS estimates, as you can see, are increasing nicely, which is actually quite interesting, even though they haven't reduced this, even though the tariffs are most likely going to be put into place. And it's the same with the revenue, they're also increasing that nicely and more and more. If you like this video, please don't forget to leave a like and subscribe. And if you want to see more videos like this, please leave the comments to analyze in the comment section below.